Hello and welcome to our Tuesday Market Watch. My name is Ngubuzam Tian, the CEO and founder of the International School of Traders. Today, I'm going to go through the markets and show you exactly what we are expecting and what are the trades that we are looking at. What can we trade today or this week? Today is the 30th of January, 2024. And thank you for joining me. Now, if you're new here, please do like this video and subscribe to this channel or follow this page. Now, let us go exactly straight into the market. But before that, we have to start off with some news. Now, today, in terms of what the news, how the news are looking, we are going to be going to look into what happened today. In terms of what's expected in the markets today, in terms of news, we have seen quite a number of news, especially with consumer credit for December in Britain, and then also mortgage approvals. All of those we have seen, and also one of the important one was the German GDP quarter on quarter for quarter four. And I think that is for the previous quarter since we are in January. Now, the GDP, we can see that in Europe, or actually in Germany, it has declined further from negative 0.1% to negative 3%. Gross domestic products really show how really people are acting, or actually how they are participating in the economy. So it's very important. It's a very important indicator in terms of fundamental trading. Now, let us go into what is expected. Can we look at into today's news? We know that in 18 minutes from now, I don't know, maybe let me just say 12 o'clock, and this 12 o'clock afternoon in South African time, we are expecting GDP year on year in Europe, and also GDP quarter on quarter as well. Now, later on today, nothing much is expected, especially for budget balance in South Africa. That is for 2 o'clock. Now, for those who really love trading South African rand, that is very, very important. Very important for us to look into this one. I'm going to look into some technicals and see if we can predict something that's going to be key for those who love trading the South African rand. Now, in terms of the US dollar, what we can expect at 5 p.m. is consumer confidence and job openings. Consumer confidence is very, very important in terms of also how the customers or consumers actually are participating in the market. It's one of the leading indicators as well. So now, as we're going to the market, right, as we're going to go through and dive into the markets, I want to show you a couple of things. I want to teach you as well a little bit on how to apply your Fibonacci when you are trading. But before we look into the Fibonacci, which is one of the tools that I really like and have been using for a number of years. I think the first time I actually used it was in 2019 or 2018, somewhere around the 2019, yeah. And I have been successful using it most of the time. So, okay, so what are we expecting? What are we expecting today? I'm not going to go into this one because in terms of the structures, in terms of what we look, in terms of what I like when I'm trading, there's nothing yet except except when the market comes down to this, if you're looking on a 1 hour level, to this very important level, which I'm seeing at the moment. Just want to insert an object. Yeah, if you look into this area, we do have a pin bar, which is looking quite good here. So if markets can come down all the way down to this level here, I'll be very happy to take a buy, moving all the way up. So this is how it's looking on the 1 hour time frame. Now, let me see if applying a fib is going to help. If it does help, yeah. So that area is around the 78.6 level, which I'm going to explain to you in a 0.6 level. We can expect some buys, market coming down and then going all the way up. So this can be one of the outlooks, for the next coming hours. We don't know what can happen. It's Tuesday. Market has been slow. but we can expect quite a number of things to happen. Okay, cool. So let's look into some other markets. Let's look into gold, which is actually a good setup at the moment. I actually love gold, but it is it's just been playing hard to get, so to say, right? Gold has been playing hard to get. Gold is in some sort of a downwards movement. If you are looking from the 28th of December, we've been seeing a downwards movement, especially from 2088 mark, going all the way down to especially what's this level? Yeah. Okay. Sorry, I had to move my camera. I mean my screen or whatsoever you call it. So market has moved quite significantly to 2001 as point is 83. That is a very significant move over the past couple of, actually a month move. But we know that gold can move significantly, right? Can really move it once if it wants to move. So what can we do? What can we do in the chain on this market over here? As you can see, I've applied it here all the way down. Now, what happens or how do we apply a Fibonacci? Now, let me show you how do I really apply the Fibonacci. So what you want to have is you want to have a trending market. A trending market is the market that is very straightforward. It's showing you exactly where it's going with the highs and lows. So in this particular case, we want to have on a seller's market, you want to have lower lows and lower highs. This is a seller's market. Now, in this particular case, you want to apply your Fibonacci starting from all the way up, which is you apply it from the left to the right. That's the first thing. You apply it from the left to the right. Now, in a downwards market, you apply it from lower high to the lower low. So meaning I'm going to apply it from here to here because this is my lower high and this is my lower low. So I'm going to apply it from here to here. So what does this mean? That means that if the market start retracing towards this area, it's actually pulling back towards some important levels in the past, according to Fibonacci levels, where one of them is going to act as a resistance, and we are going to be taking some cells at a certain level or one of those levels there. So in this particular case, that is what we are seeing on a gold chart. Now, that's a vice versa also when you are looking at a buyer's market. Let's see if you've got some higher highs and higher lows. You want to apply it from a higher low to a higher high, lower lows and lower high, higher lows and higher highs. So you want to apply it from a higher low, which is here, to a higher high, from left to right. Now, when the market start pulling back, then in those levels, you can look for a very significant level where you can start taking a buy or a sell. Now, let us look in the situation of gold. Let me just clear all of this. Let us look into the situation of gold in this particular case. So what we have on gold is that the market has been trending nicely in terms of giving us those lower lows and lower highs, especially on this movement that I've just shown you, giving us these sort of levels, these beautiful, beautiful, beautiful levels, right? So we are at this point where we are seeing something like this. So what have I done? I've done it. I've actually okay, sorry about that. So what I've gone ahead and done is I've applied this in a way that we are seeing this is a lower high, this is a downwards market, and then this is a lower high. I've applied it from there till this area, which is in this particular case has given us some beautiful levels of resistance over here. Now, one of the very important levels when it comes to trading Fibonacci is 61.8, which is a golden retracement ratio. And when the market reaches there, usually it changes direction towards the, towards the other, changes direction. Let me put it this way. And in this case, market has reached a 61.8, right, level, which is where I'd love to take a sell, right? However, also looking at the 78.6, there's another important level there instead of resistance. I really love, in terms of what I'm seeing here, I'd really love to sell here. Now, what can happen? Okay, let me just look into the 1 hour time frame here. As you can see, that market has given us a resistance in this area. It's given us huge. We can start selling here, and also the 70.6 level is the way to go in this particular case. So what am I going to do for the demonstration here? What I'm going to do is I'm going to take a sell live with you guys just to show you. But even if it does go into a negative or we lose this trade, I hope you guys will understand in terms of how we really or where we really trade the using the Fibonacci level. I think just above this level will be fine. And then okay, so our take profit in this case is going to be the 0% level. However, I am also very optimistic in terms of going all the way down to that buy limit order, which we highlighted very early. So I'm going to leave it just there. So we do have a good ratio even here in terms of our risk here. So use proper risk management in terms of trading when you are trading this trade. Now, let us look into other ones as well. We do have Euro USD. Now, Euro USD in this particular case, if you look at a 4-hour time frame, we did analyze this chart and did bounce off at this level, and we were looking to buy at this level, or actually at around this level. So if I apply my Fibonacci from here all the way up to this area, we can see that this whole move here is a retracement of this bigger move. So the 70.6 is where I would love to buy, and this is where the market is at the moment. So in this particular case, I've taken a buy, even though it's a little bit earlier, but it's fine. I do have my stop loss just outside this structure. If you're looking to a 1 hour time frame as well, these are the levels which we took last time when we were trading this item trade. So in terms of trading this item, I've taken a buy order on Euro USD with a stop loss of 1.0993 and a take profit. I mean, actually, that's a take profit. Stop loss at 1.07558 and a take profit of 1.0993. That is a take profit that we have in this particular case right here. Okay, cool. So that's on Euro USD. I hope you guys do understand on that one. I'm gonna move over to I'm gonna move on to the next one. In this particular case, I'm gonna look at USD JPY. Now, USD JPY is very, it's looking good. Looking good in terms of using the trend lines, the Fibonacci, and all of those things. I am looking at this as a very beautiful trade and a setup in this particular case. So we've had a very significant move here. And I remember we hesitated, and we did hesitate to take this trade last week, and I didn't want to be involved. Now, the market did move quite significantly in terms of high highs and high lows, and reached the retracement level of the 78.6. Now, why did I apply this Fibonacci in this particular case? For those who might ask that question. Now, the reason why I applied it in this way is because of this, how the market has been moving in this particular manner. We are getting vibes of lower lows and lower highs, and you can see how the market is pushed to the 78.6 and started pushing all the way down once again, which I believe that before getting here we might see a move which is more or less the same, or which is more like this. Let me just put it this way. As market has moved here, change direction to this area and then down. Now, do we have any level that we can look at them? Absolutely. The first one, the previous 61.8 is going to play a very big role. And then obviously, when we go down into some smaller time frame, we might even see some other things which can be seen as some sort of a light of where we can go with this market. And what I've gone ahead and done here is that I've also drawn out the Fibonacci retracement tool, and then I am expecting markets to push all the way up, not necessarily the 61.8 in this case, but I really love to. But I'm thinking the 78.6, so that this trend line can be some sort of a confirmation in terms of markets, pushing all the way up. So I really love this level in terms of the retest as well. So it's a significant level. Yeah. Okay, cool. So GBP CHF, one of the trades that I'm really looking at is GBP CHF. Looking to this trade, I can see that we have a very beautiful trending market towards the downside. Do I like to trade this market? Not necessarily, but the market is looking good in terms of coming all the way down and then bouncing towards the higher level once again. So not necessarily liking to trade this one, but it is looking good for those who'd like to analyze it. And then GBP USD, we took a very good trade last week in terms of the sell, in terms of the sellers. It was profitable. We then, in this particular case, what we noticed here is that we do have what is called, or the market is actually trapped into this zone. This is now called a sideways market, where we're having equal lows and equal highs. And in this particular case, what do I like to do? In this particular case, even though it's risky, I really love to sell high and buy low. Simple as that. Sell high and buy low if there is an opportunity. Now, do we have any opportunity on GBPUSD? Probably yes, or probably no. In this particular case, we do have a very significant sort of a pin buy, and this one also is showing some very good signs in terms of the markets pushing all the way up to some previous levels. But hey, when the market is trapped in a zone like this, you might not want to trade it, because it might go anywhere or any direction anytime. So I'm not going to trade this for now. I'm just going to look at it very deeply. And then CHF is the same situation. Although in this one, yes, we did win a trade here last week. But can we win another trade this week? Let's look into the 30-minute time frame. What we are looking at here is actually markets trying to push all the way down, and the 61.8 is one of the good levels, but not the best. For me, the best is the 78.6. Even though this market is a sideways market, or the ranging market, but hey, the 78.6 looking very good. So I can place a buy limit order. In this particular case, I do have my buy limit order at 1. Just wait a second. I'll tell you now. I'm just gonna adjust a few things. I'll just tell you now. Okay, I'm trying to find my take profit here. Okay, cool. So I made a mistake. Okay, cool. So in this particular case, what you're looking at is to buy at this level, which is 78.6, and then our stop loss just below this structure over here. Liking this one. So just below this structure, then we can take our, we can take our stop loss here. But we do have, I think, quite a significant risk reward ratio. So in this particular case, If this goes in the right direction, this is a good risk reward ratio and a good setup as well. AUD nothing much for me. There's quite a few things that I'm expecting from this trade, and the DST nothing yet. USD CAD nothing yet. And then let us look at USD, which is something that we might see moving later on today. So what we have here, we do have a nice, beautiful market, which is a bullish market. Now, there's quite a few things that I'm not happy with here, but let us see. Okay, cool. So market has come down all the way down to the 70.6, and that's a good one. That might be signs that during the news, market is going to push all the way up. Just respecting this 78.6 level. I don't know. Probably we're gonna see something close to that, right? But hey, other than that, the market is also in this particular case trapped in a sideways type of market. So if I can just show you this, you look into these areas over here that market is trapped under. It is without a doubt that this market is in some sort of a ranging market situation, right? Okay, cool. So that's all for now. That's all for now. I'm going to share with you this video on the groups and everywhere. And thank you so much for joining me. I will see you on the other side of the withdrawals. One and only. Shalom.